Most people think of gold's price performance measured in dollars, but let's take a look at what other currencies have measured gold's performance over the last year as we explore. I tell folks that we should really think of a new line of thinking with regards to precious metals, a paradigm shift, if you will, when we think about them measured in ounces, not denominated by other currencies. But in this video, we're going to take a look at how gold is measured in other currencies compared to the dollar. As we take a look at a new visualization here that it comes to us from Visual Capitalist that measures gold's return across other currencies. When we think about it, we must first understand that the dollar, this very note right here that I'm holding in my hand, it is losing value by design every year, even when there's not out of control inflation. The value of the dollar is dropping by at least 2%, and sometimes a little bit less, but largely more, especially when measured across the full spectrum of those measures of inflation. But that's just the dollar. It's the cleanest of the dirty shirts in the laundry pile of other currencies that are out there, as many central banks are utilizing modern monetary theory and quantitative easing policies. Now, sooner or later, these currencies are going to be reset and rescaled and revalued. But until such a time, we're going to take a look over the past year at this visualization of gold's return across currencies in 2022. When gold posted a small gain in 2022 for investors in the United States, the metal posted significant gains across other currencies. Look at this. This is a measure in percentage. And let's take a look at some of these little bullet points here. According to JP Morgan, gold's price is expected to hover around $18.60 per ounce towards the end of 2023, which is kind of a little less than where it is as I record this video now. In 2022, the US dollar gained over 10% in value, while other major currencies took a hit. And that's the measure compared to other currencies. It really didn't gain in value. In fact, really, it's losing value. So I don't agree with that nomenclature there. Other major currencies took a hit. As a result, investors worldwide looked towards gold as a hedge against inflation. And by the way, I'll stop there because I think gold really should be considered as a hedge against economic instability. And not just economic, but other factors like geopolitical, war, emergencies. Let's say there's an EMP. Let's say there's a natural disaster that lasts for a long period of time over a wide expanded region. And that's what gold does and has proven itself time and time again in that regard. But as you can see, gold compared to the dollar has not done nearly as well, rising only 0.4% according to the data here from this. And by the way, this is based off the LBMA gold price, precious metals and local currencies from Bloomberg, and the benchmark ICE measure for the dollar there, and the World Gold Council. Pretty amazing to see. And the euro is up dramatically in price for gold, 6.7%. The Swiss franc is at 1.7%. The Australian dollar was up 7.1% last year. And between that and the Canadian dollar, up 7.7%, is very close to our interest, or very close to our inflation rate here. In fact, the Chinese yuan is the high end of the inflation rate that we saw here in the United States of its measure of how well gold has done over that past year. In the Indian rupee, it's up 11.8%. I think this is one reason why Indians have been importing a lot more silver than gold over the past year here. And 2022 has been the year of quantitative tightening among many central banks because of inflation. And I think that's something that is quite relevant to see why these currencies have done so poorly and gold has done so well in those currencies. This is a testament, folks, to the fact that gold definitely is that hedge against inflation and has proven itself in these other currencies. It's really only a matter of time before it does so here. And I'm going to let the cat out. Not out of the bag, but outside of the door here. The cat is out, and I am back. But nonetheless, look at this. The pound sterling up 12.5%. The Japanese yen, it's up 14.4%. Well above our inflation measures here in the United States. Inflation in these other countries, though, have been very high, and I would love to see those inflation numbers compared to here. Maybe we'll see some of that as we look down before. But look at Turkey, folks. Turkey is massive. 41.2% gold has risen there. And Turkey is a very special place for many different reasons here. Turkey's lira hit a record low of 18.75 against the U.S. dollar in December after the country's government vowed to lower interest rates. So they're lowering interest rates, and other countries and other central banks are raising interest rates. Now think about that, and also think about how much gold the central bank of Turkey has taken in, and how much their citizens have been accumulating and buying gold as well too to fight against this situation. Now Turkey's lira has had trouble in the past. It is a record. It is known for its unstable currencies. So there it is. And we know that it's as a safe haven commodity investors and governments use to protect their wealth, and governments via the central banks. While the metal posted a small gain for the investors in the United States, it posted significant gains across these other currencies. And so we can see here, this is an example of where it is, where the currencies and the actual prices and the return in these other nations. And Turkish lira, you can see it's at the very top there. And so while investors in the United States saw a 0.4% gain with gold in 2022, the metal posted over a 10% return against the rupee, pound sterling, Japanese yen, and Turkish lira with 41.2%. Several analysts are projecting record highs for gold in 2023 as the U.S. Fed is forecasted to slow its pace of rate hikes. However, with latest news now, and even as I record this video, there's fresh statements from the Federal Reserve Chair, Jerome Powell, saying that they're going to continue to raise rates. There's really no reason for them not to at this point, considering that the employment numbers come in much better than expected. Now, that much better than expected does not mean quality jobs, but jobs nonetheless. Many people, for all intents and purposes, forced to go back to work as the stymies have pretty much stopped now, and they are, with inflation, they're needing to work. And think about those numbers too. How many of those people are working 2, maybe even 3 jobs? And that's data that should be readily accessible and seen, but I've not seen that data and the quality of those types of jobs really that apparent, although people have reported on it. Gold's price is also expected to be supported by increasing demand from central banks that are looking to diversify foreign exchange holdings and reduce exposure to the dollar. In addition, gold bars and coins should remain in high demand thanks to an economic rebound in China, the biggest gold consuming market in the world. And yes, and that is going to be something to watch. And with demand not only from central banks but China, it's going to be very fascinating, especially with what's going on and what perceived could happen by 2025, and that is a ramp up to a possible invasion of Taiwan. We'll see what happens there. According to Goldman Sachs, gold's price is expected to hover around 1860 and per ounce towards the end of 2023, although in the infographic, it says here it's JP Morgan. So I think there's an error in that, but it'll be fascinating to see. But I always like to see these infographics. It always gives you a little bit of a different perspective here on the metals markets and how to visualize how gold is done with other currencies and how it portrays precious metals information. Let me know what your thoughts are in the comment section below about these data. And this should encourage you, for those of you who do accumulate gold, to see these kind of numbers. It's only a matter of time before it catches up with the dollar, too. So I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.